prices are rising, and that means interest rates are under pressure to increase. But something else is becoming a trend. Share prices might fall if companies do not pass on those price rises. Joining us live now, Business Editor Ross Greenwood to explain. Ross, it all starts with pizza.
Yeah, a simple pizza, right? What could be easier? You know, you've got your dough, you've got your tomato, you've got a bit of ham on the top, a few vegetables on the top, stick it in the oven and deliver it to somebody. Yeah. That is Domino's Pizza. It's good here. It's a brilliant business around the world. But have a look at what happened to the Domino's Pizza share price yesterday. So there it is, wandering along. This is the past 5 days. It opens yesterday after the annual meeting was on Wednesday. And crunch, it was down at one stage by 19%, which is worth about $2 billion, give or take, on the company's valuation. And it really hovered there during the day. Now, a lot of fund managers are looking through this, but what was it that Domino's Pizza and its boss, Don May, did? Well, effectively what they said was, number one, that some of the sales in some areas, they weren't as, shall I say, precise about those as they could have been. And the second thing was that Domino's said prices are rising. And the fact of the matter is, if prices are rising on a very thin margin business, such as pizza, just look at it there, going into the oven, there's really not much in the way of it, yet the margin is obviously the key when you're trying to get that pizza out to people as quickly as possible. That's the reason why the share price got hammered. It was probably overdone, if the truth be known. But that is what's going to take place to a whole bunch of other companies around the place as well. They've got costs that are rising right now. If you don't pass on those price rises, then what happens is your profits fall. If profits fall, share prices get hammered. That's exactly what the investors were spooked about at Domino's Pizza yesterday.
So do you see this happening across the board in the ASX, Ross?
Yeah, well, can I just say, every company has got to make its decision. It doesn't matter whether it's Bunnings owners, West Farmers, whether it's the big supermarket groups, whether it's companies selling furniture, companies selling cars, a whole range of companies selling anything. At some point, because of supply chains being so tight right now, with goods going up, wages going up, all of these things are just adding to the costs of companies. And at some stage, they're going to have to make a decision. And of course, as soon as they start making those decisions to raise prices, then number one, consumers are going to make choices, and number two, what's going to happen is inflation rises, and that is really systemic inflation, which causes central banks like our Reserve Bank to raise interest rates.
Okay, so is it a good thing ultimately or a bad thing for the markets, Ross, with all of that said?
Okay, so a few things. In the past, companies couldn't raise prices. They had to absorb these losses themselves. But the fact of the matter is, once they all start to raise the price together and inflation starts to rise, it can also be a good thing because, of course, rising prices means technically you're taking in more money. If you can control your costs, especially your wages, well, under those circumstances, profits rise, therefore share prices rise. So it's going to be a company by company, individual business by individual business basis that you're going to find the impacts of this really. And so that's the reason why annual meetings, company profit results, people will be looking at what those chief executives say about the future of their businesses.
Yeah, you mentioned a key word there being wages, Ross. As you know, they've been flat for some time, even before the pandemic. So how much is that factored in to the RBA's decision? Does that mean that there'll be, a little while to come before those RBA rates rise?
Well, the RBA wants wages to rise. It's been key. It's been saying it wants full employment in Australia, which is probably a 3-point something of the unemployment rate. As a result, the pressure is on the wages to rise. So they want a little bit of wage inflation. They don't want a lot of wage inflation. But the presumption is, I think, from government, from Treasury, from the Reserve Bank, from pretty much business as well, is eventually Australia is going to reopen its international borders, bring in a flood of workers from overseas. That's going to help house prices. That's going to take pressure off wages, and that's going to take pressure off the labour shortages and the skilled labour shortages that so many businesses are reporting right now.
Okay, subject of shortages at the moment, Ross. There's a shortage of new cars in Australia, the worst October sales in 19 years.
Yeah, it is. And so just think about that. The worst October sales in 19 years. And what that's all about is computer chips. There's a shortage of computer chips around the world right now. There are two major sources of computer chips. One is in China and two is in Taiwan. And of course, that right now is sensitive. And so as a result, the lack of computer chips, because the world wants them, means that the lack of cars coming into Australia. And so what you saw in the new car sales figures out yesterday for October was really this quite incredible change. Now, we can show you a little bit here. So here's the top selling cars in October. But I want to tell you another little story while we do this. Here's the Ford Ranger on top. Now, the traditional leading sales car in Australia is the Toyota Hilux. It's number 2. You can see its sales are down 10%. There's the Corolla, there's the Hyundai. But right now, on the annual basis, the Ford Ranger is only 3,000 cars sold away from the Toyota Hilux, and they've got 3 months to go. And so if they can actually overtake the Toyota Hilux, I think somebody said yesterday, 23 years since Ford has had any car, since the old days of the Falcon, any car whatsoever leading the Australian sales. And the Ford Ranger, in a fairly soft year for car sales, is very close to that right now, knocking off the Toyota Hilux.
That is interesting. All right, Ross Greenwood, good to chat as always.
No problem.